Comcast wants to learn how to train a dragon. All that and more on this consumer goods edition of Industry Focus. Greetings, fools. I am Sean O'Reilly, joining you here from Fool Headquarters in Alexandria, Virginia. It is May 3rd, 2016, and I am here in studio with the incomparable Vincent Shen, and we're talking all things consumer goods. How's it going, man?
How are you, Sean?
Not too bad. So Comcast came out of nowhere and said, hey, DreamWorks, we want to buy you. And this is probably a long time coming, and we'll get into the reasons for that in a minute, because DreamWorks for a long time has been a value stock by most measures. Plus, everybody likes Shrek and, Madagascar and stuff. But before we dive in, did you happen to watch any highlights from the Berkshire Hathaway annual meeting?
No, I've seen some of Buffett's comments, and I know that Michael from our team was able to go out and actually attend the meeting.
He and Gabby did a great show yesterday. So for our listeners that don't normally listen to the financial show, highly recommend doing that. It aired yesterday, and it was a really good show. Michael went. He was in the press box at Berkshire Hathaway. He brought us back peanut brittle.
Yeah, so they were able. So please listen in to the highlights from yesterday's episode of Industry Focus. But we wanted to cover some of the highlights, at least for consumer focused companies here. So what did you see,
so
Sean?
Buffett actually didn't do a ton of talking about consumer goods brands, because it's classic Buffett investments are Coca-Cola, Gillette, Procter & Gamble. I mean, it's so well known that he doesn't spend a ton of time on them. Although, if you read any of those old How to Pick Stocks, like Warren Buffett books that are written in the 90s and the early 2000s, they always cite these consumer goods brands, which is kind of our bread and butter, at least for this show, as what he looks for in a company. And we got a few good tidbits that I actually just wanted to highlight for our listeners. The first, the biggest of which was, the red and white elephant in the room was Coca-Cola.
Mm-hmm.
Do you still drink Coke, Vince?
I'm not a huge soda drinker these days, and I know
you used to be, though. I know I was.
Well, yeah, sure. As a kid, I think everybody before, I guess, this bigger movement towards healthier foods and trying to avoid sugary drinks like these sodas, and these companies have seen that.
Right.
But Buffett still seems pretty bullish on the company, right?
Yeah, so people in the audience, and even that hedge fund investor Bill Ackman, they've all basically criticizing Buffett for owning a stake in Coca-Cola. I mean, he owns 9% of the company. It's worth $10 or $12 billion or something. Because Coke, Ackman says it leads to obesity, and it's bad for you. These sugary drinks are they're terrible for you. They aren't part of a good diet and all this stuff. And Buffett's answer to it, which you got to give him credit, it's comical and everything, but he notes that he gets 700 calories a day, about a fourth of his caloric intake, from Coca-Cola, and switching to water and broccoli may not make it easier to living to 100. So that was his response to the whole diet type stuff, whatever. It wasn't at this meeting. There was a previous meeting where Charlie Munger chimed in, and he talked about how sugars can sometimes help soften up arteries and make them less hard and all this stuff. So, oh, man.
I don't know if I'm going to be taking, medical advice from Charlie Munger, who I respect quite a bit.
Well, and he's 92, so you could do a lot worse. But,
there you go.
Yeah. Is he 92? He's in his early 90s.
Yes, he is.
Anyway. The other question that was thrown at Buffett regarding Coca-Cola was executive compensation at Coke headquarters in Atlanta, Georgia.
Yes.
Buffett's son took his spot on Coca-Cola's board, and Buffett actually, so the board just had to vote recently on compensation packages for Coca-Cola's management team, and it included a lot of stock options.
Mm-hmm.
And Buffett actually, he didn't vote for it. He didn't vote against it. He abstained.
And that's a pretty significant... it's pretty significant since they own 9% of the company.
Yeah, it would be the IF team voting on something and half the people not being there or something.
Sure.
Or you not voting. You're that important. But and everybody was like, why didn't you vote against it if you don't like the compensation? If you don't, you've said stock options, which these guys are getting to a large degree in the compensation package in question. Why didn't you just vote against it? He's like, that would go against what I want, and I don't want to give the impression that I don't broadly support the management team, which I do. And so he abstained. I don't know. It's kind of you get the sense that it's a classic Buffett move because he does not like direct compensation or wars or anything. So anyway, last but not least, before we moved on, we've talked a lot about Heinz. We've talked about Burger King in the past, and these are, of course, deals made by 3G Capital, the private economy firm that Buffett's teamed up with, in particular for the Heinz deal. Again, lauded praises on them. Munger said he loves their cost-cutting initiatives of literally getting rid of any unnecessary expense. And coolest thing out of the meeting that I liked was Buffett said he's in awe of Jeff Bezos' genius for making customers happy buying the things they were already buying. I can attest to that. I love my Prime membership. I get my detergent delivered to my door, and I have a smile on my face. So.
Yeah, I wasn't really surprised by that comment. Just he's always come off as somebody who respects talented management, somebody who's visionary, and I don't think you could. I don't think. You could take that away from Jeff Bezos and what he's done with Amazon for sure.
I wonder, I would kill to know Buffett's thoughts on Amazon's valuation, like on a PE gap type basis.
Questionable.
I would love to know that. Anyway, so moving on to the story of the day. I definitely didn't see this coming. I don't think anybody saw this coming, but Comcast is buying DreamWorks.
Yeah, so this is the excuse me. This is the story I was really interested to talk about today. This is I know the announcement was made actually last Thursday, and the rumor has actually broke probably that Tuesday or Wednesday, and so. Keep in mind that with this deal, Comcast and specifically its NBC Universal division will be taking over DreamWorks Animation and integrating that into their filmed entertainment group. Makes perfect sense, right? Basic core details of the deal. Offer price was $41 per share, which actually was quite a premium. And I'm sure
it was in the 20s, wasn't it?
Which made I'm sure made DreamWorks shareholders quite happy. So that's a premium of 51% from Tuesday's close, which is probably which is the price I'm using just because that was before the rumors started getting out. There's a lot of trading activity on Wednesday. In fact, the stock jumped 19% on Wednesday on buyout rumors, and then when the official deal was announced, it jumped another 24% following the announcement. So in all, that's about a 51% premium. Massive that Comcast is paying. And I kind of wanted to break down this discussion into two parts, call it, just from the perspective of DreamWorks shareholders and then what it means for Comcast specifically. So on the side of being the acquired for DreamWorks shareholders, I think overall investors probably quite pleased with what is turning out to be a nice turn of events for them. The stock peaked in late 2013 at just over $35 per share, and since then it has generally been trading in a range between $20 and $25. They've had hits and misses at the box office.
Well, that's what I was about to comment, because they've obviously had some hits like Shrek and Madagascar and stuff, but they've had a lot of flops too, and it's kind of middling along, and of course they have to compete with the behemoth that is Disney's Pixar.
And we've seen that in the results too. So the company's logged a net loss in 3 of the past 5 years. And a lot of their adjusted earnings numbers are turning positive only after they back out some of these major restructuring charges that they announced. I think it was at the beginning of 2015. So we're talking about millions of dollars in terms of employee termination contracts, but also write-offs that they took with properties that ended up not working for them. And full year 2015 results definitely showed some positive momentum. Revenue was up 34%, and they had pretty robust growth across the company. That included, their feature films, their TV series, the consumer products, their new media, and looking at the ticket sales for Box Office Mojo, though, and this kind of put things in perspective for me. Of DreamWorks' top 10 highest grossing movies in the U.S., only 2 of them are from the past 5 years.
Yeah.
And
that sounds
when
about
you
right,
adjust
too.
for ticket price inflation, that falls to just 1. So only 1 of its top 10 best performers within the U.S. box office, at least, are recent properties. A lot of their bigger movies, their franchise Shrek, for example, that finished its last film in 2010. How to Train Your Dragon's done well for them. They have How to Train Your Dragon 3, I believe, coming out next year. And the thing is, the company has definitely struggled with some of its flops that included like Mr. Peabody and Sherman, Turbo, Penguins of Madagascar, where they basically could not recoup all the costs they spent on production and on marketing. So definitely, I think for DreamWorks shareholders, they're happy. Katzenberg said basically, this is the deal that we've been waiting for. So, and he's the CEO and founder of the studio. So on the Comcast side, it's obviously it's going to be much less of an impact. We have to keep in mind. I want to make sure listeners have the context that for this purchase, Comcast has more than they can pay for it with their cash on hand. $3.8 billion. They have about $5.6 billion, I think, cash on hand, and that $41 per share, they're giving DreamWorks shareholders a payout of about 80 times their expected 2016 earnings for DreamWorks. So really, really big valuation. But at the same time, keep in mind that the film entertainment division, where DreamWorks is only going to be a part of, it still only makes up about 10% of total revenue of Comcast. And ultimately, the company still generates over 60% of its top line from its actual, core cable business. So, if we remember that, this deal is likely as I'll get through the details, potentially it's going to be additive. It's still a very small piece of a much bigger puzzle. And so moving on to, what Comcast is really getting from this. So I think it comes down to three things: DreamWorks content library, the opportunities it has to integrate that intellectual property into other segments, especially its theme parks, and then Jeff Katzenberg. So in the first, DreamWorks has a ton of famous characters. You mentioned a few of them, but we're talking about Shrek, Kung Fu Panda, How to Train Your Dragon, and they also have actually a lot of older characters that I didn't know about, like Rudolph Red-Nosed Reindeer, Casper, Lassie, I think Frosty the Snowman.
I can't believe they own Rudolph.
So that's really big for Comcast to be able to leverage, especially with some of their TV entertainment, their theme parks, and a big project that Comcast has for its theme park division. Actually, they're building a multi-billion-dollar new park in China near Beijing. It'll occupy 300 acres. It'll eventually develop out through multiple phases to about 1,000 acres.
Is that part of the what I'm talking about? That's because Disneyland or Disney World, China is in that huge part outside Beijing.
But that's Shanghai.
Okay, I'm sorry. Yeah.
And then
is that part of it then?
I'd say it's part of a wider effort to develop these theme parks. China's becoming basically the biggest theme park market.
Yeah.
So, and within China, in that same market, which is, by the way, expected to soon outpace the U.S. as the biggest box office market, DreamWorks also has some relationships and joint ventures that I think Comcast could really leverage. So just for example, currently in China, they have basically a quota on the number of foreign films that can go to market or that can be shown in China as part to kind of like protect their domestic features. So I think that number's around 36, about 34 movies per year now. But with the recent release of Kung Fu Panda 3, basically DreamWorks was able to develop that with a joint venture studio in China, and they were able to release that without being on the quota list, for example. Just part of that relationship they developed there that I'm sure Comcast wants access to, with China becoming a really big entertainment market for them. So in terms of the management and getting back to Katzenberg, so he's going to be kind of like a consultant now to NBC Universal, and he'll also be focused on Awesomeness TV, which has been a big growth, a big piece of growth for DreamWorks. It's basically this millennial-focused kind of multimedia platform. But the actual leadership now for DreamWorks is going to be Chris Meledandri, who currently runs Universal's own animated studio, which is Illumination Entertainment. And Illumination itself, Comcast has already seen some success because Despicable Me, Minions have been huge, especially in the past 2 years. And I'm really interested to see what this guy Chris is going to be able to do in terms of changing the vision a little bit, because a lot of people were starting to think, at least, that Katzenberg had maybe taken DreamWorks as far as he could, and the somewhat lukewarm results over the past few years and some of the box office disappointments, not really, I guess, certain anymore in terms of where he can take the company. Now you have the resources of Comcast, its distribution platform, and where now this kind of new vision can take it. And I think people are very bullish on that. And, I just thinking about also I think how Comcast was tempted into this deal. You mentioned that, it's a bit out of the blue. DreamWorks has been a potential acquisition target multiple times from other companies.
It's been a pervasive, they'll get acquired by somebody stock for, years. And here we are.
And based on some of the background for how this deal came about that I was able to find in a report from the Los Angeles Times, basically Katzenberg was potentially working with Chinese investors to take the company private. Mm-hmm. And when Comcast management basically heard about this, they immediately jumped on the deal. And so they flew out, met with Katzenberg, got a tour of the facilities, looked at the financials, and I think it was just like maybe a week or two later they were able to announce this deal. So really fast turnaround. And putting things again into context now for again some of the competition, we've mentioned Disney. Obviously they have had a string of hits based off of their prior acquisitions of Lucasfilm, for example, Marvel,
That's putting
Pixar.
it mildly.
And a lot of people see that as the gold standard of how that company has come to like dominate the entertainment world. So let's just look at this a little bit. Marvel was a $4 billion purchase in 2009 for Disney. Lucasfilm was a $4.1 billion purchase. So right around the size of this deal for DreamWorks, $3.8 billion. So the question is, does DreamWorks have those characters and that intellectual property that is able to generate these massive hits that Marvel and Lucasfilm have?
I think
people are not sure about that.
Based upon the price tag that we're talking about for DreamWorks, I mean, that makes Marvel look like, the deal of the century right there. Mm-hmm. I mean, that's...
And at the time, a lot of people had considered Bob Iger as being willing to pay top dollar for these companies, but their value obviously played out as part of that Disney ecosystem, call it.
Right. And that's just it. And when you were talking and everything, I kept thinking to myself, the reason it works for both parties is because DreamWorks is more valuable under the Comcast umbrella, just as arguably Star Wars is more valuable under the Disney umbrella because they can make rides and put on TV shows.
Yeah, I do believe that DreamWorks, in terms of its future and where its films will go and its TV shows and things like that, I do think there's a lot of potential in joining it with such a essentially bigger parent, with something with a lot of influence. And NBC Universal Studios did incredibly well in the box office last year. I think they led all the major studios actually in terms of ticket sales. And so, with all of that in mind, Comcast, this is a small deal for them, even at $3.8 billion and even at that high premium. So not excusing that, at the same time, I do see where they find, what they see as big opportunities in terms of in China in leveraging some of that IP library that DreamWorks has and them basically turning this into a good deal. I think Comcast management has proven themselves with previous acquisitions to be pretty savvy with integrating the companies that they buy and having a good eye for what they think will be strong assets for them. And this is just another example of that.
Cool. All right. Well, thanks for your thoughts, Vince.
Thanks, Sean.
Have a good one. And if you're a loyal listener and have questions or comments, we would love to hear from you. Just email us at industryfocus@fool.com. Again, that's industryfocus@fool.com. And as always, people on this program may have interests in the stocks that they talk about, and the Motley Fool may have formal recommendations for or against those stocks, so don't buy or sell anything based solely on what you hear on this program. For Vincent Shen, I am Sean O'Reilly. Thanks for listening, and Fool on.